So Montage Gold is a company that is focused entirely on gold exploration and development in Côte d'Ivoire in West Africa. It's a part of the world we know well, and we've been there for some time in various forms. I'm not quite sure why we have a very long cautionary statement. I think the lawyers must be worried about what I'm going to say. So Kone and Montage is really a very new story. We IPO'd in Toronto in last October. But actually, it's a new story that's been long in the making. So these projects, and indeed a lot of the management and directors of Montage, go back about 10 or 12 years to redback mining. Back in the day, we were running exploration at Tasiast and Chirano, drilling a lot of holes, and we were looking for somewhere to go out and do some very grassroots early stage exploration as a bit of a break from just drilling holes all the time. And we chose north and northwest and Côte d'Ivoire as the place we'd like to do that. We went in and pegged some ground. We did some soil sampling. We made a discovery at the Kone project. It was drilled, the first drill holes were drilled almost exactly the same time as Kinross acquired Redback. And since that time, really nothing has been done on the project. The management of Redback went across to Sudan, and for the last few years, we've been working on the Block 14 gold project. In 2017, as a way of diversifying exploration outside Sudan, which has obviously had its political issues, we acquired the projects from Kinross that we'd originally pegged back in 2008 and 2009 and started some work. And during the course of 2018, we put some more holes into the Kone project and really started to understand the discovery of what Kone has going to become today. The first resource in October 2018 was 1.5 million ounces. But due to the political issues in Sudan and the revolution, which has really transformed Sudan over the last couple of years, we couldn't really do a great deal of work. So we took the opportunity, took the decision to spin the company out, to spin the project in Côte d'Ivoire out, and we formed Montage Gold. We raised a bit of money in late 2019. And during the course of the COVID pandemic, we were able to continue drilling in Côte d'Ivoire. And by, I suppose, August, September 2020, we started to understand what we had. We've been drilling some step-out holes. We're doing a lot of engineering studies in the background, trying to understand what this project could be. And on the back of that understanding and the success, decided to list the company in Toronto. And that's in October 2020, and that's really when things started to happen. So since that time, we've taken that 1.5 million ounce resource at Kone. We've turned it in January into a 4 million ounce inferred resource. We've completed a PEA on it, which I'll show you some numbers in a minute. And since then, in May, we've now drilled out that 4 million ounce inferred resource, turned it into a 4.3 million ounce indicated resource, and are moving towards completing the feasibility study on this project, taking it through permitting, and ideally having a project ready to go by the end of Q2 next year. Interestingly, the last speaker was talking about it took him 9 months to permit a drill hole in Nevada or California. We expect to take this project effectively from a PEA to a fully permitted project, ready to go, ready to build and finance within 12 months. And this is really where it works. This is a summary of the PEA. It's a large-scale gold project. It will produce over 200,000 ounces for a period of 15 years. Peak production will be about 300,000 ounces in years 2 and 3. A large-scale project, but it has a bunch of features, a bunch of characteristics which make it ideal for a large-scale open pit operation. Share price, we have suffered in the last few months, but I think this really speaks to the opportunity here, the value opportunity of Montage, looking at the asset that we've got, looking at the upside that we're trying to develop, and sort of taking that share price and the market valuation that you see today. And I think there's a huge amount of opportunity there. Quick background of the company, obviously coming from Redback, we have strong support from the likes of Lucas Lundin, Ross Beatty, and we also have Sandstorm Gold Royalties as a major shareholder. So we're not just a junior with sort of that's going to struggle to finance. With having that backing, it really distinguishes us from the crowd, and that we have a huge amount of backing that is able to take these projects forward and not just do the first financing, but do the second financing, and obviously looking forward to project financing in the future. As you can see there, the management and directors of the company, Adam Spencer is here with me today from corporate development. But actually, you can see there, probably from the 5 guys that ran Redback back in the day, we have 4 of them. Kevin is COO of Orca, but we have Rick Clark and Alessandro Bitelli on the board. And we have recently strengthened our board, increasing the independence by bringing not just Alessandro, but Sasha Bukacheva onto the board. So a strong board with a bunch of disciplines which are going to allow us to take this project. And I think that's one of the keys with Montage is we're not really an exploration company. We have a strong development asset. The focus is exploration, but we do have the expertise and the backing to be able to take this project through and develop it and construct it and produce gold at the end of the day. Despite the share price performance, I think our key thing has been to execute on our plan. When we IPO'd last October, we gave ourselves a whole series of targets, and I think we've really hit every single one of those targets. We've drilled it out, we've increased the resource size to 4 million ounces, we've completed all the test work, all the work that's gone into the PEA. We delivered a strong PEA that really sets a foundation for this project, which is only going to increase in value as we go forward. We've converted that inferred resource to a bigger indicated resource, and actually that resource is actually through the infill drilling, which is probably about 60 of that 100,000 meters. That resource has actually got a little bit better. Some of the grade, especially in the higher grade component to the resource, has improved slightly, which is obviously going to feed pretty well into the feasibility study, which is ongoing at the moment. So hitting our targets has been a very key thing, and we will continue to do that as we go forward. So why does it work? People say that grade is king, but in fact, if you're trying to take a discovery and turn it into a gold mine, there are lots of other suitors that are vying for that monarchy. You know, you've got to look at strip ratio, you've got to look at the nature of the mineralization, the hardness of the rock, the metallurgy. All of those things combine together to be able to take a discovery into production. And this is why Koné works. It's an unusual deposit in many ways. It is typical for the Birimian of West Africa, but it has certain characteristics which are making it work. The first of those is the simple geometry, the simple style of mineralization. This ore body has a true width of around 200 meters. I think our biggest intercept is over 300 meters wide. It is consistently mineralized. As you can see on the slide there, it has some higher grade blocks, the reds and the pinks on the slide, which will allow us to mine at a faster rate to bring some of that grade in to the plant. By going with a larger process plant, we also reduce the process costs. We've reduced those unit costs, which allows us to lower the cutoff, which means our strip ratio, combined with the width of the ore body, the dip of the ore body, allows us to have an ultra-low strip ratio, well below 1, and possibly with the potential that we can actually reduce that to probably closer to 0.8, 0.9 as we go into the feasibility study. It is also, the rock, is also incredibly competent. So from a geotechnical point of view, we can keep the walls of the pit relatively steep, which obviously feeds back into the strip ratio again. So lower strip ratio means lower cost. The other key aspect of this is metallurgy. So this rock, whilst most of these types of deposits have a strong component of silica alteration, which generally makes the rock harder, which makes it more costly to grind down to extract the gold. In this case, the alteration is more potassic. It's a biotite alteration, which means it's softer. So as I'll show you on a future slide, it is actually one of the softest rocks, which means when you put it into the ball mill, it costs less to grind it down to extract the gold. So all of these factors, which are simple geological factors, all have a significant economic impact when you start to try and turn this discovery into a mine. A bit more detail on the PEA. As you can see there on the bottom right, some strong economics. The plan here is to mine at a faster rate, at about 35 million tons a year for a period of 9 years. And then after that, during that period, we'll stockpile some of the low grade. And after 9 years, we'll process the stockpiles at a lower grade. But what that allows us to do is bring that higher grade component of the resource forward in the mine plan, increase the grade into the plant, and as you can see on the first 3 years there, we get up to close to or just over 300,000 ounces a year, which obviously feeds into the economics, feeds into the payback period specifically, and helps to generate that very strong PEA that you can see there. These numbers generated at $1,600 gold. Power, obviously important. In Côte d'Ivoire, we are about 60 kilometers from the national grid. Obviously, there's capital and cost involved in accessing that. But over the last few years, LNG, the use of LNG has become increasingly common in the mines. I think 6 or 7 mines in Ghana are now converting to LNG power stations. Both Ghana and Cote d'Ivoire have offshore natural gas. And this is increasingly going to become something that I think is normal in the mining industry, especially in West Africa. And we've gone with a combination of LNG and solar power, which not just gives us, is more environmentally friendly than using HFO, which is the normal source of power if you're generating it on site, but also gives us a lower cost alternative. And again, the economies of scale of this project with a large scale process plant, simple mining, large scale mining, this is nothing selective. All of those economies of scale coupled with the low power cost give us those very low processing costs, which again feed into the very attractive economics. As I said, the PEA was delivered in May. We've now completed the conversion of the inferred resource to the indicated resource, but the feasibility study is ongoing. It will be complete by the end of the year, possibly squeak into early 2022. But the work we're doing on the feasibility study continues to confirm the numbers that we put into the PEA. And at the moment, the feasibility study is actually looking very like the PEA. But key to this, as you can see on the right there, is the rock hardness. One of the softest rocks you'd see from comparable projects in Africa. As I said, that has a direct relationship to cost. Strip ratio, again, one of the lowest you'd see in this part of Africa. And again, a direct relationship to cost and operating costs for the project. The feasibility study is confirming these numbers. I think we've analyzed about another 120 metallurgical variability samples, both from a leach point of view, but also from a comminution point of view as part of the feasibility study at Lakefield in Ontario. And the numbers coming out of that work is really confirming the work that was done during the PEA. And that's really because most of the work that was done in the PEA was to a higher level than a PEA. It was an inferred resource, but a lot of the geotechnical, the metallurgical, the engineering components of that study were probably closer to a PFS level, which has allowed us to push this project forward towards feasibility study quite quickly. We've now confirmed the mining cost. Obviously, prior to that in the PEA, it was basically an estimation done by a mining consultant. We've now gone out to bids and have confirmed those costs as real. As I said, we've converted that resource. You can see there, we've turned 4 million ounces inferred into 4.3 million ounces indicated. And that's really the nature of the style of the mineralization. You know, it's very consistent. We also use very conservative resource models, and that's, I think, a key to the whole of this process is to use conservative inputs. Our pits, the mining pit in the feasibility study, the reserves will be calculated at $1,250. Our resources are put out at $1,500 gold. And I think the conservatism in the modeling itself is generating or sort of adding into the nature of this conversion. So not only have we improved it, but as you can see on the bottom graph there, we have increased the grade, increased the size of the higher grade component of the resource. So in many ways, this resource has actually improved during the conversion process from inferred to indicated. Moving forward, as you can see, it's a bit of rough layout of the project. We have excellent access to this area. There is an asphalt road that goes straight through the project. I think it's the first time in my career I've actually been able to drive to the drill rig on an asphalt road. You can see on the right there the village of Fadiduga, which is where we're based. In this part of the Cote d'Ivoire, most people live in the villages and they commute out to their fields. So we're envisaging very much minimal resettlement here. We've just started that process for the resettlement action plan. I think we've counted 20 or 25 actual structures or houses within the project footprint. So very low resettlement, very little to do on that side of things. Also, obviously, when you go from a PEA to the next stage, there are different options to look at. One of the options we're looking at is to reduce the size of the tailings dam. It actually has 2 cells on that slide. But the second cell, if we can actually put the tailings from processing the stockpiles towards the end of the mine life, if we can put those back in the pit, then we can save the cost, probably $30–40 million of sustaining capital from having that second cell in the TSF. We're also looking at options for milling, possibly the use of HPGR as opposed to SAG milling. And these options obviously looking to save money, to reduce capex, to reduce operating costs. So it's an easy place to work, very strong support from the local people. One of the, I think, important things about Côte d'Ivoire in terms of developing a mining industry is that the mining code enshrines a 0.5% royalty, which is dedicated to the local area. A committee is formed and they get to control where that money is spent, where that royalty is spent in terms of developing the local area. And obviously that gives you social license. The people here want the project to succeed because they know that they're going to be, the area is going to be developed. And it also takes a source of conflict away. It makes it easier for the company to associate with the local people. In addition to that, we've been working in this area for close to 12 years. We have very close relationships. The name Kone is the name of the chiefs in this area. It is the dominant name in the area, and that's obviously why we called it that. So all of that really is the first part of the Montage story. When we started this process a couple of years ago, we very much saw a two-phase approach to this project. The first one was Kone itself, was to demonstrate that Kone is a strong standalone operation that is capable of being developed on its own. And I think we've done that. The PEA has done that. I think the feasibility study will do that, and we'll push that towards permitting in the second quarter of next year. The thing that's really going to change this from a very solid operation to something quite special is exploration. Exploration is always key, but when you look at an operation like Kone, you look in the area to the north, we have a significant amount of ground. We've just had a new license issued at Faradougou, which adds about 360 square kilometers to our footprint. But when you look in this area and you start looking for satellite feed, and this is the key to this project, the ability to find higher grade material to feed into this project, to feed into a large low-cost operation, makes a huge difference economically. And no longer do we have to find 1 million ounces or 500,000 ounces. Anything as low as 50,000 ounces at 2 grams, relatively close within trucking distance up to sort of 50, 60 kilometers of Kone, has a significant impact on the economics of the project. So over the next period of time, we're going to be switching. We've delivered the resource into the feasibility study. The team on site now is switching their focus to exploration in the surrounding areas. We put some news out a couple of last week on the Petit Yao Central target. Take on their own in isolation of Kone, they don't look very good. We almost didn't put a press release out. It didn't figure. But when you actually look at it in the context of Kone, 50,000 ounces at 2 grams makes quite a lot of difference. It's 8 kilometers away, it's oxide, it'll be a relatively low strip, we can move it and transport it easily, and the impact on the economics from such a small amount of mineralization is significant. So exploration as we go forward, we'll look out into that area you can see on the slide. We are going to try and consolidate some of the ground held by other companies within that area. We have Fortuna, we have not Roxgold, we have Fortuna, we have Endeavour and Barrick within that area. If we can consolidate that ground around Kone up to 50 or 60 kilometers away, which we think we can haul into, then this project transforms from a solid project to something that actually looks pretty decent and starts taking it firmly into that sort of tier 2 classification. If you can add, say, 500,000 ounces of a couple of grams from 5 or 6 satellite deposits within that footprint, which is close to 2,000 square kilometers, you start looking at this as a 10-year, 300,000 ounce operation with the potential to expand further. So that is very much our target. That is very much the plan, how we're going to transform Kone from to something significant. Timeline I've really also already talked about. As I said, completion of the study very soon, and then looking to permit and start looking at financing in the new year and the second quarter. Won't really touch too much on the valuation, but obviously we feel we're pretty undervalued given the asset we have, but a huge amount of opportunity here to be able to take that and with this exploration and continued exploration over the next 6 months to a year to change that valuation considerably. Thank you very much.
Thanks, Hugh. And I think I'll just ask a question because I don't know if we're going to get one from the audience, but once you get through your PFS, have you guys started making or started planning for the capital structure decisions you need to get the money and the choices?
Yeah, very much so. I mean, I think obviously it's a significant amount of capex.
Yeah.
We're a relatively small company at the moment. So that is very much in a lot of the meetings we're having today, this week, and going into especially once the feasibility study is complete, will very much be part of that, part of the process.
An anticipated timeline for construction or decisions?
Well, if it was a perfect world, we'd like to be looking at a construction decision in the third quarter if the financing was in place, and it would probably be a 2-year build.
I understand. Terrific. I think that's all the time we have.
Perfect.
Thank you very much.
Thank you very much.
Next up, we have Mark O'Rourke from Cassiar Gold.